The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Good morning and happy Sunday to you. Yes, this is the Accunet Mortgage and Realty Show. I'm Eric Bilstead, along with Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and his son, the millennial licensed loan consultant David Wickert. Hello, gentlemen.
Great to have you back on the show, Eric.
It is great to be here.
A long time, yeah. We always love it when you're substituting because, well, you're journalistic, questioning, excellent, guidance. You're just a great guy to have on the other side of the table.
Yeah.
Well, we got a lot to talk about.
Yeah.
Yep, this week. Hey, first of all, David Wickert starring in the Community Theater Works production of Hair. One more.
Hairspray.
Hairspray.
If it was hair, that'd be a different kind of show.
Hairspray. One more show at Divine Savior Holy Angels at 1 o'clock. Saw him twice. Outstanding job, Dave.
It's not every day I put eyeliner on. So
that's
right.
Excellent.
Hey, but what consumer debt? You teased this before the show, and we've been talking. I don't know if you heard last week's show about the concept of a trillion and what an unfathomable.
That's 12 zeros for those playing at home.
It's a million,
yes,
or 1,000 billion.
Okay.
It's a lot, and so there's $1 trillion. We just passed the $1 trillion mark on a kind of debt, consumer debt out there. And here's my analogy this week of what's a trillion. We're going to talk about 1 trillion inches, David and Eric.
Okay.
So let's start with a million. 1 million inches is 15.78 miles. That's like from the west side of Brookfield to downtown Milwaukee.
It's a half marathon and then walking back to your car.
There you go. All right. Now, what about 1 billion? 1 billion inches is 15,783 miles, which means if you got on an airplane at the South Pole and you flew all the way to the North Pole,
yes,
and then came back to the northern part of Norway,
okay,
that would be 1 billion inches.
Wow.
Okay, now you're ready for 1 trillion.
Yes.
1 trillion, 15.78 million miles.
Okay.
How many times do you think you could go back and forth to the moon? Round trips to the moon. Dave.
5.
Eric.
12.
31.
Wow.
Round trips.
So you're saying trillion is a lot.
Trillion is way bigger.
Breaking news here on the
billion.
Accunet Mortgage
Yeah,
and Realty Show.
okay.
Trillion is a lot.
Write
well,
that down.
Write that down. The kind of debt that just went over $1 trillion. Dave, did you cheat and look?
Yes.
Okay. Eric, did you cheat and look?
I did not.
Okay. What do you think it is? I'll give you multiple choice. Home equity debt, student loan debt, or auto debt.
I immediately think student loan debt.
All right. Well, that would be a good guess because that's already
We're already there.
1.3 trillion.
Yes.
Okay. 1.3 trillion. And let's not minimize that 0.3.
Yes.
That's 300 billion.
Yes.
That's a lot
of debt.
money. But the kind that just went over the $1 trillion mark is auto loans, according to a CNBC report and information they gathered from Experian and the car industry, I guess. And the average car payment now for these new loans that are being made. So I think these are new car loan payments, and I think they're including leases and loans.
Yes.
Eric, do you think it's $300, $400, or $500 a month?
I'm going to say 400.
Dave?
I'm going to go 500.
Correct. 500.
And for longer, too, I think.
Yes, they're stretching it out more.
Yeah.
The average light vehicle sold for $33,000.
Does that mean, like, not a truck?
Correct.
Okay.
Correct. An SUV, I think, is still a light vehicle, don't you think, Eric?
Yeah, I'd go with that.
Okay. $33,000 is the average price in America. By the way, selling 16.6 million light vehicles, autos and light vehicles, in the month of June at an annualized pace. To put that in perspective, that's over 3 times the number, or actually just neatly 3 times the number of existing homes that sell in a year.
Okay.
That's at 5.5 million. So a lot of cars being sold.
Yeah.
The average loan or lease that's out there, $30,000. Okay.
Nice.
And the average FICO score, 710, which they're claiming is awesome, but in mortgage world, 740 and up is the best for a 30-year fixed rate. Then you got the 720 to 739 tier. So that's really the third best tier.
Okay.
Not that good. And then remember what Wall Street's doing and the big banks is they're bundling these up and they're selling them on Wall Street. And what was that article we had a couple of weeks ago, David? Record?
Talking about
defaults.
Yeah.
Record number of defaults.
Well, because everyone's looking for yield. And so if you can't find yield in your Swiss 50-year bond, maybe you're going to invest in car loans
that are securitized and rated by which companies? Oh, yeah, the rating agencies, Standard & Poor's, Moore's, Moody's, all those people.
They did a really good job 10 years ago, I heard.
On mortgages?
Yeah.
Rating those? Yeah. So we're getting, Eric, record delinquencies on these bundled up car loans.
Yep.
And that's going to have a ripple effect around the world probably again.
Yeah.
All right, but the real point of me bringing up this story is, when people get out of college, I think a lot of people say, you know what, I've worked really hard. I'm going to get myself
I deserve a car.
a new car.
Yeah.
Okay, so what's the difference between having a $500 payment and a $300 payment when you go
$200. I win. All right. Next question.
All right, David, you got a master's degree.
Come
I
on.
know that, and I don't, and it kind of, someday I'll get
It's all good.
But what impact does that have on your purchasing power? And so, we talk to a lot of people every day for our Rock Solid Pre-Approval Program, which is the way to start.
Yes.
And most people have in mind a house payment that they think they can stomach.
The most comfortable.
Yeah, like, okay, hey, I want to buy I want to have a $1,600 house payment. Well, here's an interesting number that I'll throw out before the break, and then we'll answer the question when we come back. You can buy a $250,000 home with just 5% down, so that would be $12,500, which can come from a gift.
Yes.
All or part from a gift from a family member. And your total payment, including taxes and insurance, would be about $1,646.
Okay.
All right. So when we come back, we're going to answer the question, what if you chose not to have the $500 payment and you wanted to have a $300 payment?
Okay.
And you're willing to put that towards your house payment. In other words, how much more house could you buy if you said, well, I'm going to go with the cheaper car? How much more house could you buy if you allowed your mortgage payment to go up by $200? We'll have that answer when you come back.
Sounds good. This is the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. If you want to weigh in, you can do so, 414-799-1620, or throughout the Midwest on the Accunet Mortgage toll-free talk line, 800-877-1620. It's 1014.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
When he was with the Packers, the team had two-a-days in 100-degree heat in Green Bay. Former Packers defensive lineman Santana Dotson's back in town for a special event. He's going to join Greg tomorrow to preview that and reflect on his days in green and gold. It's on Sports Central tomorrow with Greg Matzik at 7:35. 414-799-1620 if you'd like to weigh in. This is the Accunet Mortgage and Realty Show, or on the Accunet Mortgage toll-free talk line, 800-877-1620. Your chance to speak with Brian and David Wickert.
About how auto loans can sap a first-time home buyer, or really anybody's home purchasing power.
Yep.
And we posed the question, how much more house can you buy if you decide, instead of having that $500 car or truck payment, you decide, you know what, I can squeak by with a $300 payment. Maybe it's not as new a car.
Yep.
Maybe it's not as nice a car. David, you did not look at my screen.
No,
you did cheat.
Yeah.
Okay. Eric, do you think that you can buy $10,000 more house, 20 or 30 grand more house?
I'm going to go crazy. I'm going to say 30 grand.
You are correct, sir. 30 grand. So instead of that $250,000 home with 5% down, you could move on up to a $280,000 loan, and your payment would go up less than $200. And by the way, I have also accounted for higher property taxes and homeowners insurance on the more expensive house. So
that's a lot of house.
There can be a big difference.
Yeah. That's like another bedroom. That's like another...
Or a nicer neighborhood.
More square footage, yeah.
Correct. Or higher taxes if you want to live in a higher tax area or whatever. And that's just, by the way, something that first-time home buyers don't usually think about, is how property taxes can sap your buying power. Dave?
No, it's a conversation I have a lot with folks. It's if you kind of strapped into $1,000 payment, and if property taxes are $400 someplace versus $500 someplace else, that moves the needle on
how much is left
house.
over
Exactly.
for the actual loan,
Yeah.
right?
Yeah. The same way that a car payment.
Correct. A car payment. I was just thinking about it while we were on the break. You did a loan for somebody, David, just recently, who actually went out and got a different car because they had a ginormous truck payment, like $650 a month.
Yes.
And so he went in and traded that in and downsized his car.
Yes.
So that he could buy more house, which
Sure.
I commend a person for,
Yeah.
The house is generally more important than the car.
Hopefully you're spending more time in the house than the car.
Yeah, you would think so. The other thing that saps people's buying power, and there's just an article by the chief economist from the National Association of Realtors, Mr. Young, and he was, again, kind of complaining about how student loans sap the buying power of first-time buyers, and that there's a growing gap in the net worth between young people just coming out of college and old people, who have had a lifetime to accumulate. And part of it he's saying is because this evil student loans. Well, just as a reminder to anybody with student loans out there, it's important to not do your own analysis of your purchasing power, because we cannot, in the mortgage lending industry, just use that little itty-bitty minimum payment that you're making. I think it was, do you remember, was it 35% of people or some decent percentage of people
are on the income-based repayment plan?
Yes, the income-based, which means your monthly student loan payment is not enough to even cover the interest.
Yeah.
It's negatively amortizing.
Yes.
So lenders got smart to that about 2 years ago, and now the rule is if you're on that itsy-bitsy little income payment plan, we can't use that to qualify you. We have to use 1% of the outstanding student loan balance as a monthly payment. So if you got $20,000 outstanding, we have to use $200 to qualify.
And it's because we have to make sure that when you do start paying back on that student loan, that it doesn't blow up your budget along with your new house payment.
That's right. So that's why we have to do that. But the National Association of Realtors is doing kind of a cool thing. They're lobbying, and I forget if it's in the House or the Senate, trying to get a bill passed that would allow students who have federal student loan debt to refi. Because did you know, Eric, you cannot refi your student loan?
Why not?
Because it's the way
Congress makes too much interest.
Maybe that, I don't know. Because So if you got that loan, 6 years ago and it's at 8%, you can't refi unless you go to one of these non-federal government lenders.
Yeah.
So maybe that'll help people at least tamp down their interest rates, and that'll help them buy more house. All right, when we come back, Dave and I are going to talk about real situation where got a guy with over $1 million of assets.
Yeah.
800 credit, and we're struggling to get him a 30-year fixed-rate loan. But no problem given a guy who just went bankrupt 2 years ago.
And we'll tell you why.
With 625 credit. No problem getting him a loan and $5 in the bank. We'll tell you how can that possibly be when we come back.
This is the Accunet Mortgage and Realty Show on 620 WTMJ. It's 1022.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
The Republican National Convention wraps up on Monday, and today's TMJ4's Charles Benson will be there. He'll join Wisconsin's Afternoon News tomorrow at 5:21 with what's on tap for the first evening of speeches. Of course, Charlie Sykes will be broadcasting live starting tomorrow from Cleveland. Hey, guys, really quickly, we are following some breaking news. 3 officers are reported dead after a shooting in Baton Rouge. This is an area where there's already been some heightened tension between the community and police officers. CNN reporting 3 officers are dead and 7 others are shot. We're going to get an update from ABC here at the bottom of the hour with Mike Spalding, and that comes after we already had a Milwaukee police officer shot overnight as well. That officer is expected to survive, but a bloody night with the men in blue taking place right now, so we'll get an update here in about 5 minutes. But right now, back to the Accunet Mortgage and Realty Show. Brian, David.
Okay, so we have a customer in process right now. He's got actually got 2 in the same category. Okay. So I've had a couple of times where I've had to explain this fact over the last week. So one guy's got $1.7 million in assets, and we're struggling to get him approved because the reason is, you know the answer, David.
Yeah.
He doesn't have income.
Yes.
Okay. So there's a big difference. We have federal regulations now in this fine country of ours that say, hey, you got to demonstrate, if you want to make safe mortgage world,
yes,
that a borrower has income to pay back their loan, to
Yes.
service the monthly payments.
Yes.
Not assets.
Yes.
Income.
Yes.
So if you want a 30-year fixed-rate loan with the great low rates that you hear me advertise on the radio, one thing you have to have is documentable income. So this guy is retired, and what he's doing smartly is he was taking money out of his non-retirement account, okay, because if you take it out of your retirement account, then you have to pay income tax on it.
Yes.
Oh, but then why? Because the government says that's income.
Yes.
But if you take money out of your non-retirement basket,
Okay.
you can do things like harvest capital gains, which are cheaper tax rate, and it's really a smart thing to do. So, let's say he'd been taking out $10,000 a month, but he was taking it out of his non-retirement account, which equals no income or very little.
Yeah.
And so what we had to have him do is start taking the money out of his retirement account, out of his IRA, which then turns that into taxable income, which
Yes.
we can then use to
Point
qualify
at.
for the loan. Okay, then I had another guy who came into my office, and we had to verify that he had $6,000 for closing costs or reserves or something like that.
To fund the property tax. That's
Oh, was that it? Was okay. So he gives me a page from his account that has like $200,000 in it, but he just gives me the front page. And I said, Daryl, don't hit me. You're not going to like this. But I need all the pages. He said, it's like a quarter-inch thick. I know, I said. I need all the pages.
Yep.
Okay. Well, why? I've got $1.7 million of assets and great credit and blah, blah, blah. I said, here's what you have to understand. Getting a 30-year fixed-rate loan is not really about the credit quality of the borrower.
Okay.
It's really not. It's about meeting the manufacturer's specifications
Yes.
for all the documents that have to be in that loan. The manufacturer is Fannie Mae or Freddie Mac or fill in the blank, FHA. It's what is in their book. It says what pieces of paper have to be in there. It does not say if the guy's got great credit and $1.7 million in assets, then we only need the first page. Nope, doesn't say that. It says if you're verifying funds needed to close, you need the entire statement, all pages, even the one that's got the boilerplate language on it. If it says page 3 of
It's
9,
intentionally left blank. We need that page.
we need that page. We need all the pages. Why? It's in the manufacturer's manual, and we can't get by without it. So if you're talking 30-year fixed-rate money, the good stuff that everybody really wants to have, then you got to have documented assets if we need assets to close, and you got to have documented, verifiable income.
Well, and this is in contrast to highlighting the difference between income and assets, because you can have money in the bank and great credit, but if you just walked out of bankruptcy court 2 years ago but have an income, no problem.
And by the way, that's an FHA loan where we can lend 2 years after bankruptcy. By the way, a couple other quick little facts about debt outstanding. We said there was just broke through the $1 trillion mark with student loans. U.S. government debt, as of right now, according to Debt Clock, governmentdebtclock.us, is $19.4 trillion, $59,000 for every man, woman, and child in America.
We could go back to the moon a couple times.
Yeah, many more times.
Yeah.
1 to 4 residential first mortgage debt, that's the kind that you and I give out every day, David, that's $10 trillion. The percentage guaranteed by the federal government, what do you guess? 50?
Half.
Okay, David says half. You want to take a stab in the dark, Eric?
I would say half too.
It's 61%.
Wow.
So just sleep easy at night. Not only are we
Excellent.
guaranteeing the federal debt, we got 60% the government's doing. All right, so there are a couple of fun facts. After we come back from the news, we're going to give you an update on where interest rates are.
All right, this is the Accunet Mortgage and Realty Show, 414-799-1620 if you'd like to weigh in. We are following breaking news. WTMJ's Mike Spalding's in the 24-hour newsroom.
Thanks, Eric. Please.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
10:36. This is the Accunet Mortgage and Realty Show. Good morning. I'm Eric Bilstead along with Brian Wickert and David Wickert. Brian, I know that we want to get to a couple of things here quickly if we could. Then we are going to take a live coverage from ABC News regarding this active situation where officers were shot and killed in Baton Rouge. We'll do that here in about 4 minutes.
Okay. So we're going to do a little quick rate roundup here. This past week I was advertising a world record low rate at 3.125 with, if you're willing to pay a fraction of a point, with an APR of something like 3.28. Well, that's gone.
Okay.
Apparently, the Brexit isn't so scary anymore. You know, that's what drove rates down to their super-duper record lows. Stock market's roaring, so mortgage rates have come back up. Just to give you an easier to get a grip on barometer, the interest rate on a 10-year United States Treasury bond dipped as low as 1.36.
Yep.
Okay? That was like 2 weeks ago.
Yep.
And it ended the week at 1.59.
Yes.
So up darn near a quarter of a point. The mortgages haven't been quite as volatile. We can talk about that later in the show if we want to. So on a $200,000 loan with 25% equity and all the other right stuff, Dave, you got the number?
Yeah, the no closing cost option, 3.625. APR is the same. If you want to just pay 1/5 of a point, get down to 3.375. APR is 3.41. And then if you like just something in the middle, regular closing cost of $1,100 is 3.5%. APR is 3.52.
And David, what would our total closing cost be?
$1,100.
$1,100. No, okay, let's go with that. $1,100. The Freddie Mac weekly survey I know this week was at 3.42, but you had to pay half a point.
Ouch.
To get that. And then normal closing costs, I'd say in Wisconsin, if you go to a big bank or even a regional bank, is probably about $1,800.
Yeah.
Where ours are $1,160. By the way, if you compare us to Quicken Loans, which is Quicken Loans is a registered trademark used under license, and the registered trademark is owned by Intuit. Got to give them that credit. Our closing costs are literally $4,000 less than theirs for the same rate. And you can check that out. I put a page now, a comparison page. So if you've been thinking about going to Quicken Loans or using their service called Rocket Mortgage, which is a registered trademark of Quicken Loans, Inc., you don't have to do that, man, unless you want to burn through like $3,000-4,000 extra bucks.
Yeah.
We can get it done. We have e-sign now at Accunet Mortgage, Eric. We've kind of joined the 21st century.
That's great.
So you can sign all your upfront documents via e-sign.
Yep.
And you can upload your pay stubs and W-2s and stuff like that right to our website. So we are part of the modern era. The other thing that sometimes trips people up, I was just texting here during the show with a customer who's like, I want to keep my home equity line of credit open. Why do I have to close that? And the reason he has to close it is Fannie Mae and Freddie Mac charge a risk premium equal to 0.375%.
Yep.
It depends on your credit score and how much equity you have left in your home. But, on a $200,000 loan, that's $750.
Yeah.
That extra that you have to pay. So, of course, this guy wants to have the no closing cost option, but he also wants to keep his home equity line open. It's like, no, you can't do that. And he doesn't have any balance on it. So I'm working on talking him into closing that down.